Daniel Bill. Welcome back to the Fourth Revolution, where I discuss stocks for your portfolio of the future. Today we're talking about the GameStop hearing and kind of the impacts, if any, of what was happening in the testifying today in front of the U.S. House of Financial Services. I think it was more or less a political charade. And I think Bill, the representative from Michigan, Bill H., said it best by calling the whole thing political theater. And, that's exactly what it was. It was all these lawmakers trying to push their agendas, not fully understanding how the equity markets work. And you could tell based off their questions that they didn't have a full comprehensive understanding of what was going on in the background. They were just trying to push their agendas, which, is nothing less than you would expect from politicians in a hearing like this. So just wanted to break down what happened with GameStop and discuss why the CEOs of Robinhood, Melvin Capital, Reddit, and Wall Street Bets hero Keith Gill, also known as Deep Effing Value, came together today to testify in front of lawmakers. So let's jump into the charts, take a look at what happened, and take a look at what the impact will be in the long term to the financial markets. So here's the GameStop chart. I know I've shown this 100 times, but this is a good review of what's happened and how these different players impact the stock price throughout its history. So Deep Effing Value, also known as Keith Gill, was buying the stock all throughout 2019 as well as 2020. And, he didn't really see the majority of his benefits until the beginning of January of this year. And once he started posting these massive gains, other retail investors started getting involved and interested in this play. Obviously riding this thing up in a matter of, looks like 2 weeks here, to thousands of percents higher than its intrinsic value. And, this guy, Keith Gill, was able to illustrate returns that were in excess of $50 million with, an investment of less than $1 million. And this really drove a lot of retail investors to want to put big bets on GameStop, and they're buying way out of the money call options all throughout this period, which drove, you buy most of your options that you buy are from market makers, and market makers have to cover their positions by hedging what the delta is, and the delta is higher the more in the money you are. So the more in the money these calls got, the more these market makers had to drive their delta. Their delta buys, which was the gamma squeeze we all heard about. I won't go on the technicals, but the gamma squeeze and the short squeeze drove this stock up to unprecedented levels. And then that whole thing kind of collapsed and the gamma squeeze reversed, and an accelerated effect to deflate this stock all the way down to less than the $50 a share we're trading today. So why was Citadel in this hearing? That's the question a lot of people are asking, and it's because of Citadel's relationship with Robinhood. Robinhood sells a lot of their order flows to Citadel, and this is a process that has been done for decades. It's only being utilized more and more today with high frequency trading, and Robinhood is doing it to democratize, the financial worlds. This is the way that Robinhood makes its, a good portion of its money, and they wouldn't be able to do commission-free trading if it wasn't for this payment for order flow that, Citadel provides, as well as other companies, including Virtue Financial, which I'm an investor in my portfolio. Payment for order flows was the major focus of this GameStop hearing today. And it really had nothing to do with this GameStop's rise and fall, but it did have to do with the political agenda of a lot of these lawmakers. And it's trying to show that the little guy will never win and the big guy is always going to be on top at the end of the day in the financial system. That's the hypocritical part about it, is this payment for order flows is what's allowing no barriers to entry. It's allowing Robinhood to allow, commission-free, zero payment investment options. And you can invest anywhere from $1 to $100,000 in the Robinhood platform with no limitations. And it's because of this payment for order flow. It's allowing the company to continue to profit without charging commissions. And I think this is going to be a big profit driver for companies like Virtu Financial, ticker VIRT, as the level of retail investors swell. Virtu Financial takes in 25% of the U.S. retail trading volume. And with this volume growing on a seemingly daily basis, this is a good position to be in. And I'm bullish on Virtu Financial, and Citadel, unfortunately, is not publicly traded. So Virtu is our stock of choice here. So check that out. Also check out Zacks.com/promo for our latest promotion. So thank you for watching, guys. Look forward to speaking to you guys next time.